as investors, you hear about like the next greatest thing, but there is things like gold and silver that have been around for, well, frankly, eons and centuries. Now, the traditional investor, are they really invested in gold or silver or other precious metals? Kind of depends. But today, Mark and I are going to talk about his history and his experience and really just perspective on why and how gold is going to be beneficial to you, really sort of on this idea of, banks are certainly helping preserve your money, but they're also leveraging it out to other individuals. Now, an investment in something like gold, can that also be leveraged to help you do other things? So we're going to deep dive into different experiences that I have and he has in the financial space, also potentially get into real estate, maybe digital assets like crypto, to really highlight this investment thesis around gold and or maybe who should consider it. Certainly, it's not a to say this is for everyone, and certainly each individual needs to analyze their own risk tolerance and investment thesis. So don't buy blindly, but certainly this is the start of education. So Mark, let's start with education. Gold, it's been around since the beginning of time, but why are there really more people talking about gold really, these days and really past couple of years?
You get permabulls in the gold world, so they're permanently bullish on gold, and they can throw statistics at you, and very meaningful statistics. If since the year 2000, the dollar has halved in value. At the same period of time, gold is up 1,500%. So the easy solution is you just buy gold and you don't do anything else. But there are long periods of time when gold is a terrible investment. And going back to the 30s, when FDR banned American citizens from holding gold on fear of jail and $10,000 fine, from the 30s to the 70s, whilst it was held down, it was a shocking investment. But generally, when there's a crash, gold comes into its own. And so I was in the dot-com boom for stocks, just retail, and I was in the right place at the right time. It was easy. Everything went up. And as a rookie, I then sat and watched most of it come down. But I fortunately got into gold in the early 2000s. 2000 to 2007, gold did really well. And then the stock market was doing even better. And of course, when the crash came in 2008, the stock market came down 60%. Gold only came down 30%, but gold recovered within a year and then tripled, whereas the S&P took 5 years to get back to where it was. So if you overlay a gold chart against stocks, if you catch the cycles at the right time, then gold can be a very good investment when things are going wrong. And today we're recording this. The situation in Iran changes on a daily basis, but today there's talk of peace again. Then we may well see another rally in the stock market. But I just kind of feel in the current stock market, everything's so way overvalued. And so, as I'd explained to you before, in 2021, I took the profits from the crypto run and started buying gold at 1750. And I was in early. It probably took 18 months to get going. But I've started to use gold as the bank. So I don't leave cash in the bank anymore. I use gold. And last year alone, gold was up at its peak 75%, whereas the dollar will have been down 5%, 6% again with inflation. So cyclically, I believe gold is a very good investment. So you just need to think through, when to buy. If you'd bought in 2012 when it was at nearly 2,000, it would have been terrible because it then dropped to 1,000. So it is a cyclical thing with me. And I focus on getting involved, getting into assets and trading on a timed basis. So you also can leverage it. I leverage it with gold miners and silver miners. There's not enough gold and silver above ground, particularly silver, and it takes 10 years and $1 billion to open a new mine, and therefore supply and demand. Silver last year was up 160, 170%. So, do I want to leave money in the bank with the inherent risks to the bank as well? Because as we know, once you've lent your money to the bank, it's theirs in effect. You hear all these horror stories, and I've suffered some of these myself, where you go to the bank and say, hey, I need to take $8,000 out today. And it's, well, what's it for? Where are you going? And I had that recently from the UK, where I even transferred money to my son from a bank, and they wanted to know who it was going to. The clue was in the surname, what it was for, and where had I got that money from. So there are lots of positives for gold, and there's a lots of positives for being outside of the system. Probably the same with crypto.
Yeah, certainly. Yeah, it's fascinating to say, as we think about different, call it financial levers, right, for, a business owner, maybe a high income earner, really to your point, having like different kind of savings accounts, or at least as I define them, different levers, right? So as things hit the fan or as different opportunities arise, potentially like reallocating or leveraging, right? Whether it be stock collateralized loans or loans on different investments you have, or simply selling and reallocating, obviously mitigating taxes, or at least just being aware of taxes. The same thing can be done in concept with maybe whole life insurance, with cash value, or in kind of digital assets as well. But it's a lot more of an easier path to really get into based on price point, certainly the timeline that gold and silver have been around. I want to take a second to like take a step back and like have you share a little bit about your experience, right? Like it's been a breadth of it, right? Like you're not just people who are just talking about gold, if you will, right? Like you have had a lot of experiences, and not just from an age perspective going through different markets, but like how you've gone through those markets and what you've done through those markets. So tell us a little bit more about what that has looked like for your career.
Well, when I got to 40, I'd had enough and sold a business and emigrated and went to live on an island in the sun. And I was playing guitar and singing in a band for a couple of years. And then I stumbled across Forex trading. Never heard of it before. Did the usual thing, lost money, wasted a couple of years doing it, but eventually managed to crack it and went on to trade for a fund and traded for my own clients for 15 years. So I was in the financial markets anyway. I wasn't particularly into stocks, and thankfully I wasn't particularly into stocks around the dot-com, around 2008,
Yeah,
because I was focusing more on generating income from trading. But then in 2020, I was coming up to 60 years old, and I thought, I don't want to do this anymore. And I finally got into crypto. One of my students in 2015 tried to get me mining Bitcoin. And even though I was in the currency, I just didn't get it, to my shame. But in
yeah,
2020, I started buying Bitcoin at 8,000 just before it crashed with COVID to 4. But because I'd understood the blockchain and the technology and the way things were going, I was aggressively buying. And I hosted a webinar in the October of that year, and I was talking about inflation and possible stagflation and hyperinflation because of all the money printing with crypto. With COVID. And at the same time, the Fed, Powell, was saying, we think that inflation will be at zero through 2023, and we're going to try to push it up to 2%. And it was like, who's kidding who here? This is nonsense. So I took the profit from crypto and went into gold. And equally, I mean, I got into miners in 2023. My best gold miner last year was up 300% in a year. My best uranium stocks, I've been into that a lot, were over 180%. So these are insane gains, but we're not talking penny stocks. We're not talking off the wall things. We're talking mainstream stocks, but just being in the right sector at the right time. And I
yeah.
think gold is a good place to be. I have bought gold on behalf of clients today, but I am not a licensed financial advisor anywhere. So everybody needs to make their own decisions. But I have bought gold on behalf of clients.
Yeah, it's like we can be online saying, "Hey, again, you should do this or do that," or like I've done this or I've done that. It's like, oh, I exactly want to be like them, and it's like, well, you may not have the same capital, risk tolerance, awareness, education, familiarity, etc. So there's certainly a lot of factors to it. And the other thing, candidly, at least for my experience, has been similar, right? Being an entrepreneur and then now in the financial service industry in a fractional family office, when I talk to someone who's worth 2 million, 20 million, 200 million, like that's a very different aspect in
Yes.
having
Yeah.
just an understanding of like where they're trying to go, and the details behind those sort of decisions than necessarily just a hey, I did this or I did that, right? So sometimes that business owner mindset can really also come into finance, and it's like, oh, how did you scale your company? Oh, you did that way, let me do that exact same thing. In some ways you can kind of copy and paste different strategies, but I'll just leave this disclaimer, especially for those who want to get in, who also in the family office space. How someone built their wealth is traditionally not how they preserve it. So oftentimes you see, hey, look at how much percent of real estate they have or this and that. There's a lot of statistics out there which we won't, go into for the show, but it tends to be business wealth drastically outperforms someone's overall net worth, and then they reallocate into real estate or other, sort of things. Most eight-figure individuals I know are naturally going into metals, right? But maybe the six or seven-figure individual doesn't want to play it slow, and there's a lot of reasons, sort of around that. So really having that perspective of being noticing where you're at, talking to individuals who also understand different investments, because some people don't know, professionals, being financial advisors, wealth managers, don't want to allocate to maybe gold or silver or to oil and gas or film credits, etc., because they don't get paid or they don't have competency around it. And that's a personal frustration I have of the industry. Part of the reason why I'm in it, can't, help everyone or solve everything, but by golly, we can sure try. I want to certainly dive into more about, really a precious metal sort of mindset, right? Something that was interesting that I took away when we were talking about on our pre-call. I mean, you mentioned for digital assets reinvesting, same thing, kind of with gold and silver, and that's just a, strategic approach, right? Of, what the cost basis is, what the returns are, even, thinking about the taxes as well. But you mentioned something along the lines of a bar of gold will buy you a medium-sized house. What sort of prediction time frame do you have that in? How big is this house?
Well, historically, if you had a median house price, a house in America, the median price, according to the Census Office, I believe, was about $150,000. And in 2000, that would require 480 ounces of gold. Well, 480 ounces of gold today would buy you 5 medium value houses at 400 odd thousand. So gold does preserve value over time. I think personally, having some gold at all times is a useful strategy. And for those who have accumulated wealth, then it's certainly something to look at. When I was trading Forex for people, it was done through a managed structure through a broker. But I would do the same as you would do. If somebody came to me and said, look, I've got $1 million, you'd say, well, okay, you need to put 8 or 900,000 of that into safer assets than into Forex trading. But the younger ones obviously will be more aggressive. The easiest thing is just come and live in Portugal because we have no tax on gold and we have no tax on crypto. It's not a problem.
Yeah, I hear.
No tax on gold. And if you hold your crypto for more than a year, there's no tax on crypto. And the weather's nice and the people are great.
We should just end the show there. I can't continue. And for Memorial Day here coming up, I was thinking about, is there a place to, go, maybe internationally, maybe too aggressive? I mean, man, maybe next year for Portugal. I've not been, but certainly, want to go. I mean, on that end, like, what? Tell us more about investing and, traveling. Like, what is that maybe like? What are some concerns that people should be aware of, maybe with time zone changes or security or, currency risk or something? What maybe comes to mind for those who are at that level that they maybe want to go, travel or live full time, or, even want to do that for a couple months even?
I think I think one of the things is that I was talking on a round table with some of your countrymen last week, and one of the guys said, "Oh, I wouldn't go to Europe at the moment. It's going down the toilet, and there's all these people wandering around with knives and stabbing people." And Europe is going down the hill. I mean, I left the UK 25 years ago because it was going down the hill, but it's nowhere near as bad as what you were reading. But equally, I said to them, well, to be honest, with the gun culture you've got over there at the moment and everything that's going on, I wouldn't be in a rush to go to America. So the point is your perspective, or perhaps an American's perspective of what's happening over here, is because of the way that the media works. The click titles are those that get you interested. Oh, somebody's been stabbed in London. I mean, personally, I don't go to London. I don't like London. I never have really. My youngest daughter, when she left university, said to me, I don't know what I want to do. And I just said, well, here's some money, get on a plane and go somewhere. And she's been traveling for 10 years. There's lots of beautiful places to go, lots of interesting places to go. If you're going to do it, obviously security is a thing. Crypto is another thing, because obviously you're not limited to how much you can take over a border. You're not dependent on the banks, etc. You can take $1 billion of Bitcoin on a pen drive. There's all sorts of benefits from it. I mean, I think the other thing to note about this thing with gold is my distrust of banks. I mean, at the end of the day, I have a friend recently who was going to buy a second-hand motorbike, and he went to the bank. This guy's a multimillionaire. Went to the bank and he wanted $8,000 in cash, and they said, "Well, what's it for? Where are you going? Who are you buying this bike off?" And he said, "Hang on, it's my money. And if you go down that route, you can find yourself debanked." And then they said, "Well, if you tell us who it's going to, just get the invoice and we'll gladly give you the cash. And it's my money." And there are other things going on in Europe more than's going on in America at the moment. Whilst Trump's in power, he said they won't have a central bank digital currency. But here in Europe, in the UK, they're pushing like crazy for it. And I don't think people have worked out the amount of control that is going to lead to. And Tony Blair, the ex-Prime Minister of the UK, came out during COVID, and he was talking about they could tie in the vaccine certificates to the central bank digital currency. So if you're not up to date with your COVID jabs, then you won't be able to fly. And then if you owe money to the tax man, he says you owe him money, they can just take it. And then I had the situation earlier where I've had a problem with the bank in the UK because I'm an expat. They don't really want the hassle. So every time I move any kind of amount of money, I'm having to explain where it's from. I sold a property recently in the UK, and they wanted the paperwork from the year 2000 when I bought it. And where did the money come from in 2000 to buy it? For crying out loud. So it's not just gold as an asset class, it's being outside of the banking system. And as we know, it's a fractional system where if everybody goes for the money at once, it's not there because they've spent it, it's gone elsewhere. And so you've got that other side of the equation all the time. You are dependent on them. The other thing you have in America, you have this thing where your first $250,000 is guaranteed if a bank goes down.
Yes.
But what happens if 10 of them go down? And they had it in Europe in 2013. A Cypriot bank went down, and the EU, who have a guarantee of 100,000 euros, told the Greek government they had to take 6.75% out of everybody's bank account. That breaks their own rule. Now, there was a big stink about it because at the end of the day, you may have a pensioner with 5,000 in the bank and they're taking money off them. So they changed the rule and then said if you've got more than 100,000, they took up to 47% of people. So you've got lack of security, lack of confidence it's going to carry on. The whole system could come down because the debt mountain has become insane. And so for me, being outside of the system, in whichever format you choose or both, makes a lot of sense, or certainly is worth investing.
Definitely. Yeah. And it's really just to say, like, from a different perspective, it's not just about the investment, the returns, but maybe even the peace of mind, as well as that, flexibility and capability, right? That ability to have additional levers and in some ways validate, not in the sense of like investment criteria or risk tolerance, but also just, I don't want to say value system, but almost a like just perspective, right? Just this aspect of like Rome did fall, right? Like there is the, kind of Ray Dalio sort of, cycle. And therefore, as there is different legislation or different pieces, really changing to say, hey, like, even though this may get less returns, I at least want to have, this much as an option for, safety, security, savings, etc. in the chance I want to or need to, jump ship, whatever ship that might be. Hey, I want to travel for 6 months, or like, hey, I just want to go to a different country. I know others who are also getting additional passports or just at least having that sort of preparation and awareness, maybe even incorporating into additional countries to help support, their business growth, also their potential business exit. And it's less, I would say, of like conspiracy sort of piece of like, oh, this is going to happen, that's going to happen. Who knows really, especially with, lawmakers or just this world and geopolitical economic issues, right? Super separate, different discussion in a lot of different ways, but it's simply to say from a high level perspective, what can help mitigate risk and how do you want to do that? And part of this could be, again, an additional benefit or thought, as you mentioned, right? With digital assets, with things like gold and silver that have additional, sort of benefits, perspective, ease of mind that someone could agree with to be in your portfolio. Right now, is that 3% or 30%? I mean, you're probably really going to see less than 15%, but if we're doomsday preppers, and we're thinking that, hey, we got to have this additional cap, certainly that could really change. But I have seen how there's definitely an open-mindedness to that perspective, and it goes well beyond just returns, but also just that accessibility, at the very least, that there is that one account that they could at least access to, at least hold them over for kind of a month or two, sort of thing, and potentially even move. I know a handful of people from the UK who moved to Dubai, and not to say that's the right thing to do. It's really just to say that, like, as people have different perspectives, or sure, risk tolerances, but even just like citizen participation, they might just be like, hey, the US just isn't for me, I'm going to go to Costa Rica, right? And same with similar countries. Yeah, please, what's coming to mind?
There's a lot of people who have gone to the Middle East from the UK because the political situation is a shambles, and it's a very left-wing government that are very counter business. And so a lot of people have gone. But then I have 3 clients at the moment living there. And then, of course, the irony is the war's kicked off, and there's a lot having to go back again with their tail between the legs. But there's talk as well now of having an exit tax, and I think they've already done it in some. I think they've probably done it in California.
Yeah,
And again,
yeah,
when you talk about politics, they're going to bring in this billionaire tax to raise all this money. Well, the billionaires have left, so they've actually got less tax money coming in than if they'd not interfered. And the UK government's done the same thing as well. So again, politically, it's like, if Trump loses the next election and the Democrats get back in power, and we get the likes of Bernie Sanders saying, well, anybody that's got more than X amount of money, then they don't need it, we'll just confiscate it, there'll be a rush for the door. So to me, you're talking about things people should be thinking about. They should have been thinking about this a few years ago, and they really need to speed it up now, because the governments are coming up with more and more creative ways to tax people. And if you're not careful, it'll be too late. I've done this thing. I had a company abroad 10 years ago, and it's not as straightforward as they make out. So again, you have to do a lot of research about it. But anybody who's thinking about a second passport, or toying with the idea of going somewhere else, I would suggest they should get on with the research at the very least.
Yeah, I will say my life has transformed exponentially with TSA PreCheck and with global entry. The next stage is, definitely that additional, passport, citizenship, something of the sort. There's even conferences of individuals who are coming together who are like, not digital nomads, but like financial nomads. I'll need to recall of what the conference is. But certainly, people are thinking more and more of this from a citizen standpoint, from a financial standpoint, and just a lifestyle standpoint. Like, different kind of snowboard, right? Like, let's be in Europe this time, and this time, here, especially with maybe different visas, or different economic or war type toils. I want to ensure that we end with something that you also shared that was very interesting on the pre-call, and the idea of metal in change, right? So as we think of solar and technology as it continues to progress, data centers, etc., that, I mean, is there any chance that it's going to be down and to the right? It really seems like there's some progression towards continued in reinvestment, right, within metals, and the continuation, right? You mentioned supply demand. So what is your future prediction for some of these metals, and is this something that you're seeing is like the thing that you're just like hopping on and investing in, or you're just being more passive with?
The thing with silver is gold is the safe haven, as we know. It's also used, and culturally, India and China are the periods of high demand for jewelry. And the Chinese, because the Chinese housing market collapsed a couple of years ago, the Chinese are very big on saving gold. So that's gold's part of the equation. Silver is a supply and demand thing, as well as, if not more as. And the thing now is that as the world is becoming more clean fuel, then solar panel growth is exponential. And there was more silver used last year than was above ground. So they're going into reserves. And as I mentioned earlier, it takes 10 years and $1 billion to open a new mine. So I never invest in explorers. Explorers, the guy with the pan looking for it in the river, they can burn through money like nobody's
Sure. Same,
business.
same thing with oil and gas. So totally.
Yeah,
Yeah.
yeah.
Same thing.
I don't touch the explorers. But then you have like the Premier League or the big boys. They usually don't go up a lot, but it's the next ones down. The ones that are producing, often they are situated geographically next to one of the big boys, so there's always a chance that would get bought out. But silver, for me, from a supply and demand point of view, I think silver still has a long way to run because silver is in computers, it's in electric cars. There's talk that Samsung are bringing a new battery out for electric car. It'll have a range of 1,000 kilometers and a charge of half an hour, but it'll need half a bar of silver. So when you
Mhm.
throw that into the mix on top of everything else, I think silver still has a long way to go. Uranium, there's a shortage of supply in uranium. The biggest uranium miner in the world is based in Kazakhstan. They've just done a deal with India. India's going to take half of their uranium. So again, supply and demand, there's not enough. You can't just suddenly start churning uranium out in your backyard. It takes years and years and years to get permits and all the rest of it. So anything along those lines for me. Rare earths is another thing that I'm invested in at the moment. Started last year. China controls 95% of the world's rare earth. Trump has pointed out late in terms of the Americans looking at what the Chinese have been doing. But rare earth metals are in everything, and they're particularly in F-35s and weaponry and things, of which the weapons side of things, the West is running out because they've all been giving it away to Ukraine and now being used in the Middle East. So all of these things, I'm just trying to look all the time for, well, if this is happening, how will affect that? Where is the money to be made? And that would be my tip for people. Just think it through. Well, if that's happening, how's that going to impact that? And what's the supply and demand situation?
I did have a
Brilliant.
question come through, and it was if someone has ETF exposure to gold, does that count or does it need to be physical gold? Like, define what investing in precious metals is to you.
The preppers will tell you that you need it buried in the ground and you need it away from everything. I travel a lot, so I don't have any in the house. I buy it through a broker, and it's stored in Switzerland, so it's in a third country away from UK government. I can access it via a credit card, debit card, so I don't need to use cash and transfer things around.
How do you define investing in gold and silver? Because those are different ways to invest, right? But just
Yeah,
to make sure like people understand your terminology of what your experience and what your thought
yeah.
process is.
I buy the base layer is bullion, and whether you choose to store that at home or not is your independent choice. A prepper will be armed and have a piece of land and have the gold and silver. I don't do that. I have it stored in a vault in Switzerland. The next level to monetize that, to make profit from it, are the mining stocks, as we've discussed before. An ETF it's not the same as owning gold. A gold buff will tell you that there's no guarantee that the ETF actually holds the gold. But the
Mm,
ETF in a lot of countries can be bought within a tax wrapper, and therefore you're getting access to gold. Any gains that you make can be tax free. You're the expert for that in America. Um, so there are different levels and different things to get in, but the purest is the bullion. The thing is, if you buy bullion, though, you do have to pay money to store it and insure it.
but it's free to look at if it's, yeah, with you. Mark, thanks for coming on, share, insights and perspectives that you have. What is the best way for people to connect with you or continue any conversation that they want to?
I've just started a Substack and started sharing how to generate income from trading, and then sharing some of my investing. And my main website is forexmentorpro.com, where I teach people how to generate income from trading and then how to invest it smarter in a different way.
Yeah, sounds wonderful. Well, thanks for sharing your insight, Mark. I do appreciate it.
Thanks for inviting me. Good to
You
meet you.
bet. Now, before you go, if today's conversation was worth your time, I'd ask you to do one thing, and that's leave a review. But not for me. It's for the next founder who's searching for a show that actually speaks to where they are. Now, a review takes 30 seconds, and it's the single most useful thing that you can do to help the show reach the people it's built for. Anything less than a 5-star review does hurt the show. It hurts being heard by someone else. So if you do have feedback, send it to me directly on LinkedIn or by responding to my newsletter if you're already subscribed. I read every response that comes through. Now, if you're not sure what the newsletter is, I publish a weekly newsletter called the Entrepreneur's Family Office. Every month, I focus on a specific topic like sales or operations and taxes, but I do weekly insights that help you in the path of growing your business and your personal wealth without sacrificing your joy or increasing your identity to your wealth. It's free and it's written for business owners through my lens of talking to other entrepreneurs, meeting with family offices and investment allocators, and also my own experience of the businesses I've run. Now, newsletter subscribers also get first access to events that I host across the country with the types of people I mentioned. If that's the type of access that you're looking for and the information that you need, the newsletter is where it starts. There's a link in the show notes for you to subscribe. If you're a founder, CEO, or business owner who would like to be on this podcast, reach out. I do occasionally take requests. I'm Paul H. Graham, and this is the Investor's Guide to Joy podcast. And it's how we have the wealth without the weight and the joy without the guilt. See you on the next episode.